Hello, today's February 22nd. We will be talking about, well, first of all, I'll give some updates in the student loan world, some timelines about what student aid is going to, or federal student aid will be focusing on, and what it means for the new repayment plan that Biden has proposed. The commenting period is up, so thanks for those who commented in support of the new repayment plan. And then I'm going to talk about how medical debt and medical collections impacts the home buying process. And the reason is because I got so many comments on how medical debt, just the credit reporting updates, and so many comments and so many questions that I wanted to make a follow-up video to some of those comments and some of those posts. Okay, so first I'm going to start with the student loan news. So we know that this coming week, the 28th of February, the end of February, we will have the Supreme Court hearing. There's also a ton of really important cases the Supreme Court will be ruling on around the same time, including big tech cases like should Twitter and Google be held responsible if they post news, allowed third-party news posters to post something that ends up in, I don't know, like a hate crime or like hate groups acting, right? So there's going to be some very interesting cases coming up that I'm curious to see what the conservative Supreme Court, just how they'll rule on. But I will be giving a detailed breakdown of the analysis on the Supreme Court case. I will most likely be listening to the whole hearing online. I don't know if you know that, but you can listen to the entire Supreme Court cases and hear what the justices have to say on the Supreme Court website. I will likely be doing that and bring a full breakdown. In the meantime, what's likely going to happen after February is, well, first of all, just to know, very important for May, for those who have been paying for 10 or 20 years, 10 if you're a nonprofit worker, and 20 if you're a private sector employee, and do not have evidence of your qualifying payments to get your loans forgiven or to eventually stop paying, I highly encourage people to consider enrolling their direct loans into an income-driven repayment plan, because that will force your servicer to count your payments and put a max timeline of 10 to 20 years and forgive the rest of your loans. Really important. There's a May deadline to do that. That, when I say income driven, I mean pay as you earn, revised pay as you earn, income-based repayment, income contingency repayment. If you have been paying in standard, or you've been a combination of deferment and standard, and you've been paying for so many years and don't see an end sight and still have a significant balance, please reach out to us, because we have helped many borrowers get many years of qualifying payments, which will reduce their overall debt burden and overall amount they have to pay back to the government. So if you have a high balance and you've been paying for years and years and years, please do not hesitate to contact us, because literally we have 3 months to act to get a massive amount of payments counted towards, it's called literally the IDR waiver. And they will adjust your account to reflect even periods of forbearance, as well as this administrative pause, as counted payments. So please reach out to us if you have no idea how many payments have counted and how to get in that plan. So if you do not have direct loans, you will have to consolidate to get into them. We highly recommend people get their ducks in a row, because May is the deadline. In the news, I want to talk about, Congress did not increase the budget of federal student aid, and they have a lot of things to execute on. Until May, will likely be receiving people's income-driven repayment waiver and counting their payments. That's what federal student aid, as well as all the servicers, will likely be doing. But there also seems to be, they have a lot of stuff to do, like the new revised pay-as-you-earn program, which they wrote the legislation, they wrote the rules for, took public commenting, so the Department of Ed is working on that now. They have to prepare to return to repayment, including hiring. All the federal servicers need to hire more people to answer the phone and answer your questions. New public service loan forgiveness rules, working on that, as well as updating people's payments, because there's tons of payments that have not counted. We've seen borrowers who come to us who have filed their paperwork and they've been transferred. People's loans are getting transferred to MOHELA if you're a public service loan forgiveness applicant now. And a lot of times the payment count isn't updated to reflect what they had filed for their previous, with their previous servicer. Okay, so just be aware. So implementing the new rules and making sure that that counts. And then of course, income-driven repayment. So the news is, since they didn't get increased funding to execute on all these programs, including the Supreme Court decision on the $10,000 to $20,000 of relief, I predict most likely that the new revised pay-as-you-earn program implementation will likely be pushed back, which means the lack of funding can delay the rollout of the new plan. And the new plan is really advantageous for borrowers because it lowers the monthly payment obligations. And of course, the news around that is Republicans are trying to block President Biden's rollout of the new revised pay-as-you-earn plan. That's no surprise, right? So let's see how that goes. So that goes for this week's updates in the student loan world. Now I want to talk about, by the way, if this information is useful to you, your friends, your family, please do not hesitate to share. Please subscribe and like this video, and please comment with any questions, because I do actually take your content requests very, very seriously. So please comment and please share. Now I'm going to transition to talk a little bit about how medical debt is counted and acknowledged in the mortgage lending process. Good news. It's treated very leniently. So lenders will categorize debt in non-medical debt and medical debt, okay? And in the mortgage underwriting process, medical debt is treated much, much more lenient. So I'm going to go through a little bit about how it's treated. So home buyers can qualify. People ask me all the time, if I have debt in collections, can I qualify for a mortgage? Home buyers can qualify with debt in collections. Obviously, it's a little harder if you're in dispute of certain debt items, but if it's in collections, you can still close on a mortgage. A mortgage applicant can still get a mortgage with unsatisfied collections and charge-off accounts. You do not have to pay off collection accounts in order to qualify, not even for an FHA mortgage, okay? So I wanted to put that out there. For non-medical collections, implying nothing for medical, like, for example, automobile installment debt, utility collection accounts, things like that, that's considered non-medical. To confirm, non-medical collections, essentially what happens in the mortgage underwriting process is they use 5% of the balance of unpaid collections will count towards the monthly debt to income ratio. And debt to income is essentially all your monthly debt obligation divided by your monthly income. Okay, so I just wanted to go over that real quick. They will use that towards the payment formula, and that's without you actually making the payment. They will just say, let's say you owe $3,000 on a loan that is in collections. They'll just take 5%, which is $150, and say that goes towards your monthly debt obligation. Okay. So that's an FYI. On the medical debt side, because I want to answer that, they are, I don't want to say they're ignoring it entirely, but up to a specific balance. Okay, so $20,000 of unsatisfied, unpaid collection account, if the balance is medical debt, the underwriter will not take 5%. So if it's under $20,000, if it's medical, they will not use the 5% rule. which means medical debt and collections you will not have to use 5% to count towards the debt to income. So I wanted to talk about that. Obviously, if you have not watched my other video, I'll link it above so you can see it. It talks about the new rules around extending the time to pay, as well as medical debt under $500 not coming up on the credit whatsoever. If you want all the details on that, because you have medical debt, I encourage you to watch that video. But essentially, the medical debt is such a huge crisis in this country, and it's being treated more leniently in the mortgage process. So if you have debt and collections, don't feel like, oh my gosh, this means I can't buy a house. I mean, I have my own story. Like, my husband, he was having a really hard time breathing, and he was having issues just with his lungs. He just was having this really weird like cough, and like it seemed like there's water in his lungs or something. So I was like, we should go to the hospital. Like, we should get help, you know? And so he agreed to go. We had insurance, and lo and behold, like 18 months later, he gets a letter from a lawyer saying he has this collections and that he needs to pay them. And it turns out he called up our insurance company, United Healthcare, and they're like, oh, send that to us immediately, like, and also file dispute, because they should have filed it to your insurance company. So what ended up happening was the hospital didn't even file the claim through the insurance. It just went straight to collections, because we found out, because the hospital didn't have his address, but he was literally there for like almost all day. What do you mean you don't have his address? Like, you asked for his driver's license, our address is on it, right? We weren't trying to hide who we are or anything. They didn't ask for his insurance card, nothing. And of course he was there sick. He doesn't remember everything, like paperwork wise they gave him. But I tell this story because somehow he ended up with like a $50,000 bill or something crazy in collections. And they were trying to like get him to pay a fraction of that in collections. And it shouldn't have gone to collections. We should have just paid our copay to the insurance, you know? And that's how medical debt ends up in collections on people's records, because somehow the hospital or the clinic doesn't have a person's address and they just send it in collections. And how the collections works is, at least in Florida, I don't know about every state, is they send it to an attorney who does a search and basically searches you down through public records. So like it could be through tax records, through voting records. They search you down, and then they send you a letter saying you owe X amount, and it's an attorney's office. So you get scared, like, why is this attorney chasing me down for money, right? So I use that as an example because that could have easily, and in fact, we should check, my husband should really check that did not end up on his credit, that he didn't pay medical debt or something. So that's an example that I like to put, that should have not even ended up. I'm not trying to say people don't have legitimate medical debt that they needed to pay that wasn't part of like insurance, like people are uninsured. I get that. But the point is there's a due process, and the law is set up so there's an opportunity to negotiate with the hospital, to get on a payment plan, to work on a financial assistance plan with the hospital, all that. I would recommend trying as early, as possible to work out a plan with the hospital so that doesn't unintentionally happen. I mean, with my husband and I, we just assumed they billed the insurance. We didn't assume we'd hear 18 months later that they sent it to collections, right? So I share that story just to say that if you're in the pool of people who have unfortunately gotten medical debt on your credit, that do not fret. That if you're trying to buy a home, if it's under $20,000, they won't use 5%. If it is not, there are ways to deal with it and ways to handle it that can take that information off of your credit report. So let me know if you have any questions. I hope that was a little bit of an overview so that people in collections or people that have questions and concerns about the medical debt have gotten their answers. Please do not be selfish with this content. Again, like, share, subscribe. Let me know if you have any questions, comment down below. I'm not as quick to getting to answers because I'm also trying to run our company here at LoanSense. But if you have any questions on your student loans, have a large balance, been paying for years, please do not miss this opportunity with what's called the IDR waiver. You can even Google it. We're here on standby. We helped a borrower yesterday who thought she only had a 1.5 year count towards loan forgiveness. Lo and behold, we find out she has 6 years. So you never know, that can be you too. Please stay updated with our weekly content, especially if you have student loans. We hope to be the first to bring you the news and get you the relief that you're working so hard towards. Have a great rest of the week.